There's a ton of strategy around setting up an IRA for your children, but it's a little bit tough to do. What is an IRA? An individual retirement account. And what's good about getting them set up so young is you're not only setting them up for success for the financial future, but they're understanding the concept of saving and compounding money then. And since they technically can't access this money till they're 59 and a half, it gives them a longer runway to let that money compound so that they'll have more in the future. These are some things that you'd have to consider to actually get this going. First, is your child even eligible to do this? If your child is 4, 5, 6 years old and you just give them $5,000, you can't go to a broker and put that $5,000 in an IRA for them. They would have had to earn that money from providing some sort of service. Next, what you'd have to pick is the difference between a traditional IRA and a Roth IRA. Here's a quick synopsis of what this is. Traditional money, you put in and you get a tax deduction for it, meaning if I put $5,000 in a traditional IRA, the government will not make me pay tax on it. But later on, when I pull out that $5,000, which has probably grown to $20,000, I will owe tax on the entire $20,000. Flip-flopped, a Roth is I put in the $5,000 and I pay tax on it today, but when that $5,000 grows to $20,000, I don't owe any tax on it. So that's the difference between traditional and Roth IRAs. And last would be to actually set up the account through a financial institution that you choose. Just some quick math on how this could play out. If you contributed $5,000 a year, every year for 40 years, and you only got 5% growth on that money, that would be $200,000 that you contribute over the 40 years, but that would grow to over $600,000 just by doing that every single year for $5,000 a year. So you can see that it's not the timing the market, as they say, it's time in the market. I'm not the biggest fan of the stock market, but again, this is a great tool to not only help your children build wealth, but allow them that compounding effect so that over the years, they'll have a substantial amount of money.